In this video, I'll be breaking down how much you need to make in order to afford a 2023 BMW M3. I think you should really consider following one of these rules in order to avoid making a huge mistake that'll end up setting you back for years down the road, financially speaking. I've also included a link to a free auto insurance quote where you could save up to about $600 a year in the description below, but more on that later. There are 4 options I'll be going over today, and you can decide on which one suits you the best depending on how into cars you are. There are a couple people out there that just want a vehicle that'll take them from point A to point B, and then there's a few others that are willing to sacrifice quite a lot more, spend a little bit more money in order to get the vehicle that they really want. Stick around to the end of the video to find out what method would be best for your personal situation and preferences. This is 4-Wheel Finance, a channel dedicated to helping you make smart financial decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please give it a like, subscribe, comment down below what other vehicles you would like me to review. The first rule is the 24-10 rule, and this states that you should put down at least 20% on the car, you shouldn't finance it for more than 4 years or 48 months, and the payment can't be more than 10% of your monthly gross income. Since the 2023 BMW M3 has an MSRP of about $72,800, this would mean you'd need to put down about $14,500. And with the average new vehicle interest rate of 3.86% on a 48-month term, this would bring your monthly payment to $1,311.36. Take note here that you're also paying about $4,700 in interest. Bankrate states that the average monthly insurance cost is about $148, but this varies quite a lot. It depends on your age, your gender, your driving habits, your driving history, and what part of the country you live in. So use that smart financial link I've got there in the description. It's a completely free auto insurance quote to give a look, see how much it would cost for you to insure something like this. This brings your monthly total to about $1,459. Going back to that 24-10 rule, this would make your monthly gross income need to be about $14,593, which would add up to about $175,000 a year. I'll re-encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car and put what would be your car payment of $1,311 in the market instead, over the course of 5 years with a relatively conservative 6% rate of return, this would turn into about $91,564, gaining almost $13,000 a year in interest, just in 5 years. Take a look at those Acorns and M1 Finance links I've got in the description. It's super easy to get started investing, and I highly encourage you to get started as early as you can. Even a small amount of money can turn into something pretty special over a long term. And this is just for the first 5 years. If you were to continue that for 10 years, it would amount to about $214,000, again, just at that 6% rate of return. And take a look at the interest there over a 10-year period. For reference, the stock market averages around 10% return per year, so that 6% that I have here as an estimate is pretty conservative. The next rule I've got here is my own. And for my rule, I think you should have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out both your Roth IRA and ideally your HSA as well if your company offers one. And I know that this seems like a lot of saving and investing, but then I don't give you a monthly percentage rule that you have to stick to in terms of spending. So it's up to you to decide if you want to spend more of your monthly income on a vehicle, or if you'd rather go out to dinner more, go on more vacations, or spend more money on car parts, etc. As soon as you've got your bases covered with saving and investing, the rest is really up to you to decide. And the 6-month emergency fund just ensures that you're safe in the case of an emergency, especially if you are in an industry such as sales or commission-based, where the monthly income can kind of vary. And the investment portion just gives you a little bit of financial security later in life. As of now, the average life expectancy is about 78 years, and so I think it's super important for you to get started investing as early as you can because you're most likely going to need that money. And most of the people say nothing here is guaranteed, and while that's true that nothing's guaranteed, on average people live to about 78 years old, and so it's difficult to put a value on having peace of mind for yourself or your family's future. Next rule here is the Dave Ramsey rule, and he thinks that you should have at least a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your annual gross income, and you should purchase it in cash. Given that the 2023 BMW M3 starts at $72,800, this would make your annual gross income need to be around $145,000. Ideally, it's nice to buy a vehicle in cash. There are a couple pros to this in that you wouldn't have to pay that $4,700 in interest, and your car insurance would be a little bit lower. But obviously, there's not a whole lot of people that have $73,000 in cash that they can put towards a car, and there's a chance that you might make a little bit more money if that money was in the market instead. Final rule I'll be going over is the 1/10 rule, which was developed by Financial Samurai. Personally, one I think the majority of people trying to build their wealth rapidly should consider. It really doesn't allow you to buy a new vehicle, but it's designed to help you spend responsibly, which reduces your financial car ownership stress and increases your net worth a little bit faster over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a car. It could be new or old, but for the vast majority of people, it's probably going to be used, and you need to own it for at least 5 years, but ideally more. And the theory here is to help minimize your financial car ownership stress, frees up a little bit of money to invest in assets or opportunities that may come your way and help your assets go up in value. It's much more stressful and difficult making important life decisions when you're worried about payments each and every month. Once again, this is 4-Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them down there in the comments below. And take a look at that Smart Financial link. It can get you a free auto insurance quote where you could save up to $600 per year, and it takes like 20-30 seconds to fill out.